All right, welcome to this week's Explainer. Now, you've probably heard all the buzz about the next big AI agent, right? Well, today, we're going to do something a little different. We're going to follow the money. We're going to look right past the hype to see where the real plumbing for our automated future is actually being built. And maybe more importantly, who is building it. So let's just dive right in. The big question for today is a fascinating one. On the surface, everyone's talking about the next awesome AI agent, but underneath all that noise, some of the biggest financial players on the planet are making these quiet, very coordinated moves. So what exactly are they building, and why should you care?
I mean, you can't miss it, right? The story right now is all about AI agents, these autonomous little programs that can go out and do tasks for us. The market is absolutely buzzing about them, and speculation around agent tokens is just through the roof. It really feels like a new digital gold rush. But you have to ask, is that the whole story?
And that's the classic pattern, isn't it? You know, during a gold rush, the surest way to get rich wasn't always finding gold. It was selling the picks and shovels. We're seeing some serious evidence that the exact same thing is happening right now in this new AI economy. The real, long-term value might not be in the agents themselves, but in the essential infrastructure that makes them all work.
Okay, so here's our first major clue. While the crypto world has been building out in the open for everyone to see, traditional finance, I'm talking the Wall Street giants, has been quietly building in the background. And look, they're not just playing around anymore. They are actually shipping product, and they're moving incredibly, surprisingly fast. And this is where it gets really interesting, because a direct competition is popping up. On one side, you've got the crypto-native solutions trying to build the payment rails for this new agent economy. But on the other side, you have the titans, Stripe, Visa, and Circle. All of them are jumping into the exact same race to become the payment layer for all these machine-to-machine transactions. And listen, this is not some someday plan. This is happening right now. In the span of just 1 week, Stripe went live with its mainnet, Circle launched a totally frictionless payment solution, and Visa announced its own dedicated layer for agents. The thinking is that they are moving maybe 6 to 12 months faster than anyone in the market even thought possible. This is a coordinated strategic push. It's for real. Okay, so talk is one thing, but where the capital flows, that's another. When we actually look at where the real money is going, this fascinating disconnect starts to appear. The story the market is telling itself and the story the money is telling are two very different things. And this chart just illustrates it perfectly. Look at this. Areas like agent payments are seeing a huge influx of quiet capital, but the public hype, it's pretty low. Meanwhile, you've got sectors like meme coins that have all the hype in the world, but are actually seeing capital leave. This is a classic mispricing, a huge gap between the narrative and the reality of where money's flowing.
Now, here's a crucial piece of the puzzle. This move by Apollo Global, one of the world's biggest private equity firms, they didn't just buy a few tokens to speculate. No. They spent over $1 billion to acquire a 9% governance stake in a DeFi protocol. That's a decentralized finance platform. This signals a massive shift. Big institutions are moving from just using this tech to strategically owning the core infrastructure.
So with all these pieces in place, you've got the surface-level hype, the quiet, coordinated moves by big finance, and the actual flow of capital. What does it all mean? Well, it all points to a really powerful investment thesis.
This quote just nails it. It perfectly captures the logic. Think about it. You can create a million, a billion, basically an infinite number of different AI agents. They'll come and go. But every single one of them to actually work in an economy will need two fundamental things: a way to pay and be paid, and a secure identity. Those layers are finite. They're essential.
And that brings us to this week's alpha hypothesis, which we're calling the sinking value hypothesis. The core idea is simple. Economic value doesn't just stay at the flashy surface layer. Over time, it naturally sinks, concentrating in the essential, foundational infrastructure that everything else has to be built on top of.
And this visualizes it perfectly. So at the very top, you've got the agent tokens. Super high hype, but also a potentially infinite supply. Below that, you have the payment protocols that these agents have to use to do anything, and that generates real revenue. And then at the very bottom, the bedrock is identity. You just can't have a trusted economy without it. Value flows down this stack and gets trapped at the bottom. So what's the end game here? What does this all mean for the future? Well, if the real lasting value is in those foundational layers, then owning those layers basically means owning the future. This isn't just some investment trend, it's pointing towards a massive battle for control. And that is the race we are watching unfold in real time.
The moves by firms like Stripe, Visa, and Apollo aren't random at all. It's a strategic, calculated play to build and own the financial and identity rails for a future where machines, not just people, are the main economic players.
And that leaves us with one final and really crucial question. This new economy is being built right before our very eyes. But who is going to own its foundations? Will it be the decentralized, open protocols that were pioneered by the crypto world? Or will it be the established giants of Wall Street, who are now moving faster and with more capital than anyone ever thought possible? The answer to that is going to define the next era of our digital world. Thanks for tuning in.